Okay, let's get started. Wonderful. Thanks, everybody. So, if you are a Tesla investor or you're wondering whether or not you should be a Tesla investor, or if you're just somebody who wants to get better at investing in general, this is going to be the show for you. So, welcome, everybody. This is the very first episode of CyberBulls. And what this is going to be a weekly series. We're going to do this both on the YouTube Live and Twitter Spaces every Tuesday at 3 p.m. Pacific. We're going to do fun, informative discussions on Tesla, investing, and even a sprinkling of life philosophies. So, when it comes to investing, every person is different, and you need to find out your risk profile. And you'll come to find that it's also very much related to your kind of life philosophy. Okay, that's better. So, okay, the good news is the three of us on the show, we all have different investing strategies. And what we're going to do is we're going to discuss a lot, with that along with our views on Tesla. So let me introduce the bulls. There's Christian Valente. Christian, you want to say wave? So he's a
Hello, hi everybody.
retired corporate executive. He's previously a financial advisor. Now he's an example of someone who worked his butt off in corporate world, and then he made some money, learned how to invest, and now he's retired and he's enjoying his life, and he's basically doing this for fun. So I
Yeah,
call him the rock star because he loves music so much. And he's what I call the stoic bull. Okay. So his philosophy is momentum investing. He will follow the macro environment. He learns when to sell when he thinks that the markets get frothy, and he learns to buy when the market is going down. Okay. There is Xander. Xander Sky is about to join us again. So he's the Froyo king. He's owned four frozen yogurt shows. What's so cool about him is that uh, he actually his story is very, very inspiring because he is 100% self-taught. He left college, taught himself everything about starting a business and investing in options. So I call him the YOLO bull, right? You only live once. Because when it comes to investing, he not only does long term, right, which is what we do, many of us, but he's someone who's learned how to very successfully trade stock options as well, but in a very safe and low risk way to maximize his investing assets. Okay. And then there's me. So I'm a three-time startup founder. I'm very passionate about products and companies. And so my philosophy is I'm a long-term investor. I'm a buy and hold. And that's just sort of what I am. I try to find this once in a generation kind of company. I invest in it, like much like I did with Apple, and now it's Tesla. So I'm all in, and I'm just gonna basically hold, keep buying, and keep holding. So that's my philosophy. Okay. So today the topics we're going to cover is Tesla's on the rise. We're going to find out what happened and what's going to happen shortly. The stock split is happening this Thursday. The super catalyst, which one do we think that the bulls here think is going to be a major catalyst to the stock? The chance of a stock buyback, I think there's going to be some debate on that. And then if there's investment philosophies, we're going to kind of explore a few of that today. And then how will you be trading next month? So let's get started with you, Christian. What's going on with the stock today? Why did it rise? And I saw the statistic, or not a stat, it's a real number. 9 days ago, Tesla stock was at $710, and today it's at 935 or 900 plus. So Gary Black tweeted, he said that the technicals are saying that if Tesla breaks through 915, it can go back to 1,000 short term. So tell us what you
yeah,
think, Christian.
great question. Glad to be here, Herbert, and everyone in the audience. So just from a high level, you're right. Tesla has moved significantly, and we do this show. This is the first time we've kind of done it live, but we've done this, and we've been speaking about how Tesla moves, and when it moves fast. So we've been in a depressed market for various reasons. And now we're starting to come out of that, right? The inflation looks like it's starting to roll over a little bit. The Q2 earnings of Tesla was better than expected, which gave life to the stock, and that's what we were talking about, that the Q2 print would happen. The bad news was already baked into the stock because it had retreated from the 1,200 level into the 600s. And we said, this is a great opportunity to get Tesla for the long term. You're getting in at a great valuation. So That's what I did. And I hope a lot of you people out there in the audience did that too, because we've been predicting that once the Q2 print hit, and then they guided, which they did for a record Q3 and Q4, that the 50% was still on, and demand is not an issue. Right? Demand is not an issue. Pricing power. We've seen Tesla over the last 6 to 12 months raise prices. This is the best type of company to own in this environment. And once that Q2 print hit, we did see the stock move up, and it's done really well. Real quick, over the last year, it's actually done really well. It's up 27%. Over the last month, it's up like 30% compared to where the QQQs, the NASDAQ 100, is down, 13% over a year and down 14% in 6 months, where Tesla is flat in 6 months. So I think overall, to wrap it up in this little first bit, Tesla has accumulated into this 9 area. I'm looking at the 920 level. That is a key level. If it can break 920 and go into the 950s and close there, I think that's a great sign that it could bust through 1,000 with a record Q3.
Beautiful. And then you, Xander, what do you think? What about this technical concept? Did you agree with that?
Yeah. Great opening, Christian and Herbert. Thank you for having me. Pleasure to contribute. It's interesting how it's moving. It's supported by 900, and I'm impressed. I thought macro would keep it in the 8s and or below the 9. I thought that 9 was a level that we couldn't go below when we first started dipping out of the 1100 and the 1085 level. So I think it's what we were saying, that once macro changes, money is going to flow to the companies and the stocks that are producing earnings and that are growing. So it's really impressive, and I don't think it's going to stop, especially once you get to Q3. Australia just received a batch of Model Ys out of China, and they're delivering. It's just and then we have the shareholder meeting on Thursday, which I can't wait for. That's going to be very exciting. I'm hoping that there will be some kind of news. We don't typically hear things that are new at shareholder meetings, but I don't know. This one feels different for some reason.
Well, go ahead. Tell us your prediction. I saw Farzad's amazing predictions today. I don't think you guys saw it because they just came out.
I did not. Yeah, tell us. What do you think? Brilliant. What did he say? And
he said a lot of things. He said what he thinks is going to about possibly happen, and then he also talked about what's not going to happen, and then he gave some percentages of what could happen. So I can't remember all the specifics, but basically,
I have no idea. I mean, I think that they could maybe reveal a factory or something like that. That's their next location. That was said that it would be talked about later this year. So perhaps something like that. And it would be good. It would, guide for growth. And this whole narrative of, by 2030, 5 million vehicles or something like that, like they're magically going to stop growing, is just, it's absurd.
Yeah. So let's go through the list. So Thursday, stock split, right? Is stock split going to happen? What do you guys give? 100%?
Yeah, I would say it's 100%. I mean, some unforeseen thing, but yeah, I would give it 100%. Absolutely. We're going to see that. Yeah.
Okay. Yeah. Are they going to reiterate the 50% target?
I think they will. I think Elon is going to be upbeat. I think everyone's excited for this call. It's the first one in the new headquarters of Texas in the factory. I'm assuming it's going to be, we're all hyped. We're exciting to listen to what, Elon has to say and all the great things, and, Cybertruck coming out next year. I don't know if he'll mention that. He kind of mentioned it last time. So maybe there's a little update there. Maybe there's, an update on how it's ramping, maybe 4680. So these are all exciting things, and I'm really looking forward to it, and I think everyone is. So yeah, it's going to be awesome.
Okay, well, what do you guys think? Is the stock going to start rising immediately after the stock split is announced?
So let me chime in on that, Herbert. So what I think, you've already seen the stock move. Don't get greedy. So we've had a massive move and into the 900s. We closed above 900, 901. We've literally moved 32% in the last month. Let me repeat, 32% in a month. That is moving up. I think what happened was we got way too pessimistic. The Fed, came in. They've been raising rates. The economy has not rolled over. Inflation looks like it's starting to roll over. We see the 10-year bond coming in, and we see oil down. That has stabilized the market. So all the panic selling is over. And the money is flowing, like Xander said, into the great companies, the cash flow companies. There's no one growing like Tesla at 50% plus. No one growing EPS double 100% year over year or more. So these are the things that we've been talking about, and it takes time for markets to unpanic, and then you see it in the stock price. EPS earnings have been rising over the last 6 months, and a year, and 23 has been rising while the stock has been going down. So this is what we've been talking about. It's going to meet, the stock price is going to meet the estimates, and even if the valuation comes in, the stock will go higher, driven by the earnings.
Okay. Christian, the suggestion here is mute your microphone when you're not talking. Okay, because I think it's your speaker on the the StreamYard computer you're using. Okay.
Okay.
So Xander, you there? Do you believe what he's saying? Is that the stock? He said the stock's not gonna rise anymore after the stock split, which I completely disagree with him. He's absolutely wrong. Xander, can you hear us? Oh gosh. He's requesting. Gotcha. Sorry guys, we're learning how to do this. There you go. You can speak now. Yep, you're there. So let me go about that, Christian. I think that you're absolutely wrong. Okay, stock split happened. The movement in the last few days I don't believe was associated with a stock split, right? I think it's just everything clearing out of the way. This stock split is going to start happening. It won't happen right after the day is, but it will slowly build up by the time that it's going to happen on the 22nd of August. I'm pretty bullish. I think it's going to happen. I don't think it's going to be 80%. I think it's going to be another, let's say 20%. So you can mark my words on that one.
I disagree with you a little bit on that, Herbert, because I think the move, a lot of the move has already been done. So,
Christian, what's the price of the stock today?
901.
What did you say that you thought that the stock price would be by the end of the year 2 weeks ago?
950 to 1,000.
Okay. So who's more correct with our price predictions?
You are. Yeah, you nailed it. So, but what I would say is that if you look at the 20-for-1 stock splits for Google and for Amazon, they were muted. But now that was in a little bit of a bearish market. We are coming a little bit out of it, and the market is stabilizing. So you may be correct, but I don't think the 3-for-1 will, it will be the catalyst. I think the fundamentals of the earnings coming through and Tesla becoming a profit machine over the next 2 quarters and into next year is more what the driver of the stock will be and why institutions will buy it rather than the 3-for-1. I think the reason the last time the 5-for-1 went and the stock went parabolic is because we were in a bull market. We had meme stocks going through the roof. So I think the S&P 500 had a lot to do with that move. So I know you're very bullish and you're looking at 1,200 by the end of the year, and it may happen. And I wish it does happen, but I'm being a little bit more realistic. I'm thinking we're in that 950 to 1,000 range, could be higher, but I don't think the stock split's the catalyst. I think it's the fundamentals of the business.
I think the problem could be on my side, so I'm going to try to fix the echo. Meantime, go ahead, Xander. Tell us your thoughts.
What was the question? I was logging in.
What do you think is going to happen with the stock split? What are you expecting to go?
I think there will be some movement in. You could see it. That's how we got to the 900 level. But I don't think it's going to be quite the same impact that we had last time. So if people are looking for this crazy 80% move, I don't think you're going to have that. But the options game will change, and so that will drive a lot more action, and it'll be volatility as a result. So I think that it could tip it back to the 1,000 area. It is possible, but I am cautious. I've I kept a little bit off the table, sold for a profit, and then just keeping some ammo, which is different action for me. Something that I picked up from Christian, thanks to our wonderful conversations and coaching sessions. So, keeping a little bit, some dry powder, as he calls it. So, I've evolved, but that.
So, Xander, what is it? Did you look at the technicals? Because you look at that every day. When the price hits 915, it's supposed to be a free ride all the way to 1,000.
I lost you again.
I could take it, Herbert, if you like.
Yeah, go ahead.
So basically, when we went through for the first time, when we had the epic run, the 20x run, and we came back down from the 900 in around February of 21, we went down to the 550s, and then we started to move up, and we hit 1240. That was the initial run, right? The valuation was stretched, the excitement was euphoric, and the stock went through the roof, right? And then macro hit us. Inflation and the Fed raising rates. It's hard to any stock, no matter what the kind of momentum, you're going to get smacked down. And that's what happened. So I believe now we're in a better position. Tesla's a stronger company. They are a profitable company, even more than they were back then. They were just starting to turn profitable. So we're the different animal here. We're with a profit beast, and we're with a company now that goes through 1,000. This is important because the next time it goes through 1,000, I'm not looking to take some chips off the table at 1,200 because now it's going to have valuation support. So if you think about next year and you think conservatively they earn anywhere from $20 to $24, and you just put a simple 70 or 80 multiple on that, you have a $1,500-$1,600 stock just for cars alone. So now when it busts through, now you just still have a fairly valued company. It's not a euphoric time. That's my opinion. I don't believe the next time we go through. Yeah.
Are you saying it's all earnings and there's no super catalyst that can happen? Nothing?
The way I look at the stock, the way I own it, yes, catalyst can help it. Catalyst can help drive it day to day. But over the 6-month, 12-month period, the catalyst will fall away. No one's going to care about a stock split 3 weeks after it's done. They're not going to care about a stock split 1 week after it's done. The thing that's going to make Tesla a multi-trillion-dollar company is the earnings. I'm talking 20 to 25 billion next year. I'm talking 30, 35, 40 billion in the out years, which will turn this into with a reasonable multiple, even at 50 or 60, into a $3,000 stock pre-split. And that's not with energy business doing anything, building robots. So that's why I'm bullish. It's like free call options and all the other stuff. And the cars are the base business. And the way they're operating margins at 18%, last quarter took a little bit of hit because of the shutdown and because of the ramps of the new factories. But other than that, we're going to get right back to it. And I'm expecting big things in 3 and 4. And that's why I own the stock, because it's just a profit machine and they're going to continue it. And I'm super excited.
Yeah. So again, you're saying that it's got nothing to do. You don't think that anything's going to change in the next few months. I think there's going to be a huge number of milestones and catalysts that's coming. It's going to bump it up each time. We'll bump it up maybe 5%. So things like investment grade credit rating, right? The stock split I already gave you. I said 10% or something like that. I think that Master Plan Part 3 will come out, and I think that's going to do something. You and I have a difference. I think that AI Day 3, AI Day is not going to do anything, but you think that that's going to do something.
Yeah, so I agree with you. I know you're the milestones guy, and I love it, and it's awesome. And the catalysts are very important. But the way I think about it, and we can hear what Xander has to say, I look at it from an EPS machine now. I look at Tesla, the business, how many cars, how many units, what's the growth, 50, 60, 70%, and then what's the bottom line operating margin. I could just do a simple analysis. I don't have to do anything other than that. I can get an EPS on the bottom line, GAAP earnings, I give it a reasonable multiple, and the stock still is a double or a triple in a year or two. So, or maybe less. I'm being conservative, but you're absolutely, catalyst will drive it in the short term, but the earnings will drive it in the long term.
Yeah, that's really well put. I think the last run up to 1200, it was a lot of FOMO, a lot of questions, but now it's an earnings machine, and you don't have to hope that other people understand it. The math is simple and clear. It's making earnings. There was a multiple compression, and now you're seeing companies get taken down that aren't producing earnings, but Tesla is growing their earnings. So how do you just not look at it that way when all the FUD that you see is just, it's not playing out the way that they continue to say.
I agree with Xander completely. The earnings, you can't deny Tesla anymore because it's a profitable company. So the fear, the uncertainty, the doubt doesn't have the same impact because the facts on the ground tell you something completely different. And Xander's right. Look at the Googles of the world and the Apples of the world and the Microsofts. Look at Tesla's performance, even short term. It's outperforming in a 1 year, 6 month, and 1 month ratios because of the great power it's showing and the growth. No one's growing like Tesla. So, the facts will come out, and it might take the market a while to get it, but you got to sit there and be patient and you'll get rewarded.
You guys sound so logical. You guys sound so good. Earnings is going to make the stock go up. Tell me what happened in the last 6 months. Why did the stock not just follow the earnings? Quarter one was a blowout quarter. Everybody's freaked out on the numbers they hit. Quarter two didn't blow up, but they still shocked everybody. Earnings, which is what you're talking about, stock fell like crazy. Don't tell me momentum doesn't matter. Don't tell me that these catalysts don't make a difference in turn. Again, I talked about last time, price ledge, right? So.
Yep. No, I'm a momentum trader. I agree with you, but we went through why the macro was too strong on a record Q1, and Tesla had a stretch valuation. It was going to trade 200 times, and the market wasn't in the mood to trade 200 times when the Fed was just about to start a crazy rate hike, 75 basis points, 75 basis points, 75 basis points. The stock could not withstand that, and we did have the Shanghai shutdown, so that killed any momentum from a great Q1. And you saw Q1 it react, but it didn't last because the macro took it down. So there was good reasons why.
Can I just pause for a second? Everybody's still hearing echoes on both Twitter and the live stream. So if both of you, what I'm doing is muting both the Twitter and the live stream when I'm not talking. And if you guys can do that, press 2 buttons.
Okay. Go ahead, Tim.
Okay, I'm muted.
Go ahead, Xander. You can give your thoughts on.
What was the question?
Well, let's move on.
On catalysts?
Yeah, and earnings. I mean, catalysts. What are the catalysts that you think is coming?
Catalysts. AI Day is not exactly something that most of the wait, I'm not unmuted on the live stream. So the catalysts are just simply earnings and their growth, right? But you have Berlin and Texas ramping. Like I said, I think something that might come that isn't like it's not in the headlines is another factory, and then it'll just add fuel to the fire of growth.
Yeah, this is one thing that Farzad talked about that really I thought was brilliant. He said that Master Plan Part 3 will be announced, possibly, didn't give it a high percentage, tomorrow, or Thursday. And when they announce Master Plan Part 3, they might also announce a couple gigafactories. Again, very low percentage, but that's an intriguing potential. I tend to agree, and I'd give it higher percentage in my mind than Farzad did. And I know you guys don't think that any of this is going to even happen at all, right?
Well, I just think that the market, and we're still in a tricky period, right? We have the Fed kind of pivoting, but not really. They're still talking tough because we still have inflation at record highs. Even though it looks like everything is commodities are rolling over, we still haven't really seen it in the data. So you saw some Fed officials come out today and still talk tough. And so it kind of dampened on the market. And we also had the Pelosi going to China. So that's some macro headwinds. We don't want any problems there, which could cause some problems for the market. But pushing that aside, I think these catalysts that we talk about are more exciting for the community. I think it's less exciting for Wall Street. So when some new thing or some thing occurs, I think we get more excited and the market is more muted, especially in a market. We're still kind of in a correction to bear market. So in that kind of market, those things get marginalized. But the thing that won't get marginalized is a record Q3 print and a record Q3 earnings that blows them away. Once they see that, and then they can see Q4 coming, look out, Herbert, and that's what will drive it, in my opinion. You may be right, I may be wrong, but that's what I believe. I believe it will be more earnings-driven than headlines.
Sure, but what happened when there was a stock split announced last year, 2020? What happened?
Right.
Was there an earnings announcement happened during those 21 days?
No, but we just talked about it. We just gave you the answer that we were in a different market. We were in meme stocks where AMC was going, 100x. So Tesla deserved it. They got through the earnings and they became profitable. They weren't losing, $800 million a quarter, but we're in a different environment. They announced a 3-for-1 stock split. Did you see the stock go crazy? No, it's kind of laid around, and we already know this. It's already baked in.
And neither has Amazon and Google, right? Those announcements didn't have an impact in this market. You're still muted.
I'm wondering if you're not wearing your 2 AirPods that you had last time. We're still having an issue with echo, guys.
Yeah, I have both headphones. Here's my other one. So it's not transmitting through the car. So unless you're picking up the headphones, I'll move them further, see if that helps.
You guys have talked about earnings, and now that the cash flow from Tesla is huge. I'm a believer in what Gary Black's talking about the stock buyback. I heard you guys tell me that that's all bull. Why would they not do stock buyback? I think it's going to happen in 6 months. I'm not saying 3 months, but if they have so much cash, they're gonna be able to do it all. They're gonna build. So why did they buy Bitcoin? That's $1 billion. Now they sold that. Why wouldn't they use that $1 billion to buy stock buyback?
They won't do it. They're in growth mode. If they do a stock, the reason to do a stock buyback was when the stock was at 600, because you want to buy back the shares cheap because you think that the street, the market is undervaluing your shares. You don't want to buy back shares when the stock's up at 900 or 1,000. And especially if a company is in growth mode like Tesla, you want those capital to build factories and also to have cash, for some emergency. We talked about it the other day. I think the sell of Bitcoin saved Tesla. That Q2, if they didn't sell Bitcoin, it would have killed the operating margins, and we wouldn't have been up 10%. We could have been down 10% the next day. So that was a genius move. I'm glad they sold the Bitcoin, because now I don't have to worry about if Bitcoin crashes. I got to worry about Tesla stock getting annihilated because the margins get cut and the EPS gets knocked down because we're holding some Bitcoin.
Okay, sorry, Xander, I need to jump in here. First, 900 is cheap. So don't tell me 600 was cheap. They're not going to buy back at 900. 900 is cheap. I thought you agreed with me. Okay. Number 2, how much cash do they have in the bank right now? How much?
18 billion.
Yeah. And how much does it cost to build 5 gigafactories? And then
I don't know, 2 billion a factory.
Why can't they have 1 billion that they had spent on Bitcoin? Why can't they do that on stock buybacks? People keep saying, well, they're going to use that money for other things. The problem is they can't spend it as fast as they're making it.
I agree. And listen to me. I'm not saying that I'm not in favor of a stock buyback. I love stock buybacks. So basically the company buys shares, takes the shares off the market, and it increases the earnings per share, because then whatever profit it is, you divide it by the outstanding shares. And since the company's buying back the shares, you have less shares. So your EPS explodes on share buybacks. But usually they're more mature companies that aren't growing 50%, aren't growing earnings, year over year, 100, 200%. So in that sense, it's not a logical move, but maybe Tesla will do something like that. But originally, when this was brought up, I think it was by Leo Kwong, who's the third largest Tesla shareholder. He wanted it because the stock was getting obliterated, and he wanted Tesla to take the cash that they were generating and to buy shares when the shares were in the 600s. He's not advocating for it now. I haven't seen him tweet anything like that, but he was advocating in the 600s. So I believe long-term Tesla at 900 is cheap, but we need to let the story play out and let the earnings come through so it hits the market upside the head, and then we're going to see the result. Any comment to that?
Xander?
I'm not a big fan of this idea that Tesla's going to use their money for anything except accelerating growth, or perhaps putting that money towards a robotaxi fleet of their own, right? Like they can allocate capital much better than shareholders. So like the whole conversation about dividend, I don't think that's going to happen. Buyback is an interesting one. I think that, and Elon's talked about this before, that they'll never do a dividend, but it's like once a company's done growing, then they start doing these things, right? You see that in Apple, they're doing dividends, and so I don't think it will happen in the next couple of years. I think they're just going to deploy that capital to just insane growth, right? That's what they talk about.
I actually believe you guys too. I just try to bug you. Apple did not do stock buybacks until they had over 120-30 billion dollars in the bank, and then they're going, "What do we do with this?" And then
Exactly.
they did that. I'm just bugging you guys. I'm looking for any potential catalyst that can make this thing skyrocket. So let's jump to a quick. We have different philosophies. Okay, why don't you describe your philosophy and then tell me how you're going to trade in the next let's say 1 month, 2 months, 3 months. What are you going to be doing, and are you going to be buying more, not buying more? What are you watching for?
So for me, I'll give you a quick catalyst and then I'll answer your question. We've talked about it. Investment grade. I think even though I'm not worried about it. If it happens, it will allow other funds, now that it's investment grade, and will come in and buy Tesla because now they'll be allowed to. And I think it also shows, Wall Street, the power of Tesla, that they have a pristine balance sheet. The cash flows are coming through. It's an earnings machine. And that investment grade will give Wall Street confidence that Tesla is the big dog, and it is like an Apple, a Google, a Microsoft, or what have you. Now, as far as the second question, this time, I'm not looking at a 1200 exit or anything like that. I've been talking about this too. The first time we came through, we didn't have valuation under us. This time that we bust through 1,000, valuation is with us. And I just went through a couple of things. If they do $20 next year, you give it 80 multiple, you got a $1,600 stock. If you want to give it 100 multiple, you got a $2,000 stock. So I'm not looking to run if it gets to 1,100 or 1,200 this time, because not only is the valuation better, we have growth in 24, probably 50%. So there's no reason to think the EPS is not going to continue to grow. So why do I want to get rid of a growth stock at 1,200 where it was, 6 months ago? Because I'm scared because it had a little run, take my profits and run. No, I'm holding, and if there's any pullbacks, maybe I add. But no, this second time through, we got valuation on our side, and this is a ride to the multi-trillions now.
Okay. Before I get Xander to talk, I got to address, I always have to come back at you, Christian, just to remind everybody who's listening, okay? I'm a long-term holder. I bought Tesla since 2012. I bought it at $1,000. When it fell from 1,200, I bought it at 1,000. I made a mistake. So maybe I made a mistake. Maybe I did. I just closed my eyes. I'm here. I'm going to be fine for the next 5 years. Here's what Christian did. First of all, Christian's a momentum trader. And then you'll hear him. He'll go, you'll hear him say how much of a Tesla bull he is. Don't believe him. The guy has less than 50% of his assets in Tesla. When I found that out, I go, stop telling me how bullish you are. You're not. Now, when it went up to 1,200 the first time, he sold. Now he's buying. It's like, of course, I'm making it sound like a brilliant guy because he is. I'm learning, but I still think that's bullshit. Very interesting. But he did. He happened to time this market correctly Tell me the other times you might have missed out on if it went up to 1,500, 1,200. Now you're going, oh, when it goes back to 1,200, this time I'm not going to be scared. I'm going to hold on. You got your scared little pants on, buddy, and you sold at 1,200. You happen to make it right. Xander, go ahead and share your story.
Yeah,
because
that was luck, right? That
Oh,
was
you won't
luck.
let me respond after just pilloriing me?
Go for it, Christian. You want to respond, or you want me to defend
I
it
want to
for
respond. So
you? Go
you're
for it.
right. I got lucky. I timed it perfect. I timed it nicely. You know, you're not going to catch tops and bottoms, and I don't recommend it for everyone out there. But after you've had a good run, now remember, I owned the stock way back. You know, I didn't catch it as early as some, but in 2019, I owned the stock when it was in the, you know, that $200 to $300 range. So I made huge returns, and you know, it went up 20x. So, I mean, you can't, you know, it's not like it doubled and then you took your, you know, it was a 20x. So I thought there was going to be some pullback, and there was. With the Fed coming in and inflation roaring and the macro about to hit, it was a logical move, and I decided to do it. I still held some Tesla. I just took a huge part of the gains. But now here's the beauty. The market gave me a gift. You're right. It could have run away from me, and I would have missed some of it or a lot of it. But I was willing to do it because I already had a huge gain.
Why weren't you buying when it was at 600 a year
I
ago?
did.
Why didn't
Oh, no. So when the dip, when the six, remember
assets?
our Twitter Spaces. So I'm not quite there, but I'm highest that I've ever been. My allocation is the highest to Tesla that it's ever been. And I'll tell you this, in the 620s, in the 700s, remember I kept saying, I don't care if it's 720, 680, 640, it's not going to 550. I made that call. It's not going to 420. I don't care what the technicals say. I don't care what the bears say. It's not getting down there. I was proven right on that one. And I said accumulate in the 600s and in the 700s. And now we're sitting at 900. So I got that one right. So call two right for me. But I love it, Herbert. I love what you're saying. But you know, I'm a really good market technician.
Can you guys both of you mute your Twitter and your space and the StreamYard when you're not speaking? There's still echoes. Xander, tell us your philosophy. You've made a lot of money. You taught me something that I did, and we could share it with the group here, that I've made now $25,000 because of something you taught me that I would never have done regards to long-term leaps. And I did it 2 months ago because of your help. But tell us how you've been trading.
Sure. Well, let's address what you just said, which is this idea that I can't actually take credit for. It was from someone in Clubhouse. His name is Ronnie. Shout out to Ronnie. It's this idea of switching from being in shares to, when you have a market correction, you take a portion of your shares and you allocate it to a long-term leap, right? And the general thinking is don't do more than 10 or 20%, because if you're in a prolonged environment, you can lose all of your money. So of that money that you're willing to allocate. So what you did, and it was just an idea that I floated, because you said you'll never sell any shares, was to convert the shares, right? It's just the way that you have to change the way that you think about it. So it was to convert those shares into a long-term leap. So as the stock starts to run, you know, when you think it's reaching a top, and to what Christian was saying earlier, you know, when the market moves and you're above these moving averages, right? If you look like at a 200-day moving average or exponential moving average, you're so far away that like timing a top it's not a bad idea, right? But you have to analyze the data that's surrounding that. Is the market just too hot? You know, it's a risk. So, but my philosophy on it overall is that I trade around the edges. So I'm selling calls, although nowadays it's starting to feel like picking up pennies in front of a steamroller. You know, I sold a call for like 900 or 950 for like $1, right? Which is $100 for 100 shares worth of stock, and then it runs, and then that thing is worth $15 or whatever it is. So then if you're going to buy it back, or you have to be willing to sell the shares. So we're starting to, even though the macro is it's questionable now, something's changed, and the market wants to go bullish, but then we continue to get these news like today with Pelosi and China and Taiwan. So I'm kind of just pushing out the calls a little further up, and then if they get sold, then if I get shares called away, that's okay. But I'm also selling some puts, and just accumulating as many shares as possible, and I'm not trying to think too close. I'm looking, 5 years out is when I think about taking some money off the table. But really, it's just retirement. I'm a long-term shareholder, so not much strategy except buying a call here or there when you have like catalysts that you tweet about. When you have these things coming, throwing $5,000 at it or something that I'm willing to lose is fun, and it keeps me active.
Okay, what we're doing is working, so please mute both your StreamYard and your Twitter when you're not speaking. So Xander does options, and options are evil and they're scary, and we really shouldn't do them ever. And that's my philosophy. I was like, basically, I don't want to know anything. I don't understand options. I think that's gambling. So I've only done, yeah, go ahead, Xander.
Yeah, but real quick, there's a difference between buying, which is what I just said, buying a contract, and selling a contract, right? There's a difference between being like the gambler, and I'm going to make a lot of money, and strategically using your portfolio, and obviously you have to get to that part of you have to be large enough of a portfolio to be able to sell contracts, and this is why the stock split has an impact, because now there's a smaller portfolio can participate if you have the knowledge. And I learned all of this stuff on YouTube, so it's evil, but it is a mechanism that is available in the market that you want to understand. And a great YouTuber to kind of dip your toe if you're going to you're curious about it is a guy named In the Money. I really liked his channel, learned a lot. And then Yashu from Hit That Bid is really, really good at analyzing it. It really helped me learn.
Okay, so Xander, when you find out he trades options, but he's very careful and he only uses small amount, and his philosophy that he's been teaching me is that, when you've got a sizable asset, it's in Tesla stock, that you are actually leaving money on the table if you don't do some versions of option trading. So I'm like, no, options are evil and they're scary. You're betting. I don't ever want to do this. And I've got all my money in Tesla. And then what he said to me was, okay, why don't you do a long-term leap? So he taught me that. He walked me through it. So what I did was, when the price was down at 650, there was a long-term leap offer that said, do you believe that Tesla will be at $900 by June of 2024? I said, yeah, that's like the dumbest bet. I'll do that. And I only did very little. So he was advising me to do 10% of my IRA. And I actually only did like 2% or whatever it was, very little, just to get my first little thing down. And then, of course, the 650 is now at 850, 900. And now if I decide to sell that leap, I'm going to make $25,000+. And it is almost 3 times what the rise is of just, if I had bought 650 and it jumped up to 950, it would be 3 times that. So you're able to get more returns. Of course, you can also have the loss if you're completely wrong, but I feel like the bet is very safe for me, because I'm saying, well, I think it's going to be 900 2.5 years from, whatever it is, year and a half from now. So I thought it was a fantastic knowledge that I did, and I thought it was still safe. And he taught me how to do that. So I went, every time I yell at Xander, he has to remind me, well, I made you some money. So a lot of money.
Yeah. But it's not so much about the money. It's about understanding these strategies and, the things that are available in the market. And, yes, it's good that it worked this time, and it's still a risk. You really really need to understand these things. So I just like we operate like we're fear based right now. I was very like I sold some shares at 790. I was worried. So our psychology is so a part of us, and these timing tops and trying to sell, like selling at the top and buying at the bottom, that's really difficult to do. So if you're able to generate some cash flow for your portfolio, especially if you're retired like Christian and how I want to get to, there's this thing that lets you sit in bed. And if you are tracking something like Tesla so closely, right? A lot of us are tracking this thing every single day. And there's this thing that you could sell a contract that says that I bet you that if it won't go down to 800 next week or this week, and there's a way to generate some money. Like I don't see why one shouldn't do that if you understand what it is that you're actually doing, and how it operates.
But Xander, isn't it true? Okay, tell me if I'm wrong, guys. But isn't it true that a long-term investor almost always outperforms a regular option trader, or an unlucky option trader, or like a neutral option trader, or a momentum trader like Christian? Long-term investors buy and hold 10 to 20 years. I'm going to beat the hell out of you too. True or not true?
You're probably right, Herbert. But if you can, let me give you an example. Look, I don't recommend this, but let me give you an example where, yes, you are right. But let me give you an example where you could be wrong, and wrong badly. Let's say you pick the wrong stock. You could be a long-term investor all you want. And if you're holding a stock that, like, Ford, for the last 20 years, guess where Ford's gone for 20 years? Guess what the return you've got? A zero. You've made no money in 20 years. So good job being a long-term investor. You haven't made any money. So you're right. We're in Tesla. So we're hoping great things are going to happen, and they're going to happen. But just being a long-term investor itself doesn't help. So that's number one, if you're dealing with individual stocks. Now, let me give you the other thing. Like say people are in the S&P 500, the SPY, just a simple S&P 500, very vanilla. I'm going to dollar cost average. I'm going to work for 30 years. And after 30 years, I'm going to have X, millions of dollars because I saved up and I've invested and I got my 7-8% a year. Let's say you already have a lot of money and you're in the market. And let's say that lot of money gets cut by 50%. Well, guess what? Now you need 100% return just to get back to even. If I could somehow avoid 50, 60, 70% losses, which Kathy Wood did not do, terrible job. If you could avoid a 70% loss, then I don't need to be up 150% to get my first dollar back. So if I could make a huge profit, and I have to say this, I don't have tax consequences because a lot of my trading is in retirement accounts. So taxes are a little bit of a headwind on this strategy. But if you don't have that issue, if you could sidestep a 50, 60% decrease and get it at much cheaper prices, not 10%, not 20%, 60, 70%, you could buy so many shares with the money you sold at higher levels and then ride that whole thing up again and be way ahead of a long-term investor. It's more of a trader, but I'm just saying it can be done.
Okay, let me ask you a question, Christian. COVID hit. Did you sell? Did you sell everything?
So COVID hit, and guess what? I, like a lot of people, got a little panicked, and I actually did sell some.
So did you buy in time?
But here's the thing.
2 months later, when it skyrocketed, did you buy in time?
Yeah, I bought back in. That's what I'm saying. I could get in and out as quick as in a second. Like I could be out one day and next week be all in. So for me, I don't think of it like I'm worried about day-to-day stuff. Like I could get long real quick. And if I need to sell, I could sell real quick, but I'm not afraid, if I was wrong in my strategy, I'm not afraid to get back in heavy in a day or 2 days if I have to. So, I watch the markets every day. I love it. I love the idea of markets, psychology. These are all things that I'm into. So for me, it's fun. So I don't mind there. And if I get it wrong one day, that's fine. But most of my portfolio is long-term oriented, but there is a nice chunk of it that I do kind of trade with. And over the years, I've done well. And basically, I think you can do it, but your strategy will work long run because it's an easier strategy and you're taking your emotions out of it. But if you can control your emotions and you can spot obvious tops, when AMC is going up 100 times and GameStop's going up 50 times, when these things are happening, maybe a top's occurring. And if you can get out of tops, like who's holding why would you not sell AMC when it was up so high? Why now you're down in the 14 area? I would have liked to sell it like 10 times higher. Like, do you see how you could have sold the top and bought back in if you love AMC? AMC is a joke stock, but basically, it wasn't that hard to see a top this time around. If you could sell near the top and buy in at the bottom, that's a great strategy. And if you're not adding a lot of money, it's a way to make your money, leverage your money at selling at highs and buying in at lower levels. You're not going to time it perfectly. But if you can get in 50 or 60% lower on a lot of these stocks that have been decimated 70, 80%, 90%, that's a great way to leverage your money without working for a lot of money to get a lot of shares.
The reason I bring up that example is my friend was called by his broker and COVID hit, and he said, sell everything, sell it all. And they did. Then 2 months later, it skyrocketed back up again. I just held everything and I'm fine, just because if it never happened. And he missed out on a bunch of buybacks or, didn't buy back in time. So
I agree with you, Herbert.
Who follows it very closely, you can do this. But for other people, hey, listen, just ignore.
Yeah, I agree with that sentiment 100%. But what I'm saying is you could have been out on the COVID if you got scared. And as you see the trend of the market reversing, you could get back in, is what I'm saying. So, yeah, you might miss the first 5% of the move or 10% of the move. But if you feel that the market is moving, you can deploy that capital rather quickly and then catch the rest of it. But you're avoiding disaster because COVID, we could have been in a bear market for years if the Fed didn't come in and stimulate everything and pump a lot of money and the government gave a lot of money. So that wasn't known. So you were protecting your downside. And then if you miss a little bit upside to protect a massive downside, that's worth it if you have a lot of capital. Now, if you're not dealing with a lot of money, the best strategy is just a dollar cost average or buy great companies. You're right. And as you get your paycheck, keep adding to it. But if you already have a nice nest egg, you don't want to be caught down 50, 60% because it might take you years and years to get back to even.
You're the reason why the market crashes, Christian. Thank you. Okay, I've got a trick question for you guys. I love to do this every once in a while, okay? You guys tell me, you guys are supposedly the experts, okay? What has the most impact on the stock price, okay? Is it free cash flow? Is it earnings? Is it potential for market growth? Is it exciting product lineups? Is it the CEO? What do you think is the most impact on the stock price?
Cash.
Well, that was quick and to the point, Xander. So I'll get a little bit. He said cash. So what I think it's all of that. But the biggest thing to me is earnings. If Tesla could show investors that they are an earnings power, when I mean earnings power, there is no company of this size growing earnings 100% year over year. So if this year they do $12 in earnings, or say 12 to 14, and next year they do 20 to 24, you're basically 80 to 100% year over year earnings, which would give you then a multiple of 80 to 100 would be justified. That is unseen. Apple has no growth. It's flatlined. Google is growing, but it's growing like 10, 15%. It grew better during COVID, but now it's back to its historical 15%, 12%. And you see even Microsoft's growth is slowing. So Tesla is accelerating growth as a huge mega cap. And you see these other mega caps barely growing. And that's why, to me, Tesla is the better better play. It's the better investment, because not only the business we know, it's the business we don't know. The energy business growing, FSD taking off, if they could, solve that, which I think they will, but it's still, time to play out. And then we also have TeslaBot, and you're right. We have the genius Elon Musk, who I love and a lot of us in the audience love, who is a great entrepreneur. He's a great guy. We all look up to him. And, he amazes me with the things he's done with SpaceX and Tesla. And that's why I'm an investor, because I want to be part of the story. But at the same time, I have to use my brain. And when things don't compute, maybe I step to the side. But long term, I'm a supporter. I love the companies. I follow them. I'm excited. And I think the next 5 to 10 years are going to be amazing.
Okay. Well, the reason why I said that it's a trick question is I knew that Xander is going to say cash flow, and I knew you were going to say earnings. My answer is that it's the potential for market growth, because you could have cash flow this year, you can have cash flow next year, you can have earnings this year or next year or 3 years, 4 years from now. That will drive the stock. But what really will drive the stock and gives me kind of feel of safety is if I know that a company has unlimited market growth. So today, Tesla has sold 2% of the market of all global car sales in general. And we know that there's going to be a shift. Every car will be sold, will be EVs, and by 10 years from now. And so you want a company that can make so much money, and the market is unlimited for the next 10, 20 years. That's what's going to drive earnings. That's what's going to drive free cash flow. And obviously the company itself has to be right-sided, because there's other EV companies that are not going to be able to partake in this wonderful market opportunity available for them. Same thing happened with Apple, right? I was investing in Apple 17, 20 years ago. But when 2007 came and they showed their iPhone, that's like, okay, every phone is going to become a smartphone. This is the new standard. And even if they just get 10, 20% of the market share, they're still going to be a massive company, which is what proven to be true. They're multi-trillion-dollar companies today, despite Android copying them and getting 80, 85% of the market. Same thing with Tesla. I see that playing out. I would have invested in Amazon, which I did, but not a lot, because I realized that is definitely a massive market where every transaction is going to end up becoming online. But I felt that their expenditure was so high, and I knew it. They were just building for growth. But the cost of factories and all that was, I don't know. I was spooked by their PE ratio at the time, and I shouldn't have been, I guess. But I just didn't really like the idea of their goal is to reduce margin as much as possible, because that's to offer cheap prices and then eventually control the market, which is what they've done. But it'll take a long time to control the market because the option is high. I see Tesla in that same case, because I see this as a 10-year, 20-year unbelievable. Don't even speak about robo taxi or bots now, but just the cars alone, they're going to get 10, 20% of the market at the minimum, at the most pessimistic thing. And maybe they'll get 50% of the market if they continue to kick out a butt. So even if they get 10%, 15% of the market, they're still going to be 10 times today. That's where I'm going to put my money. So it's about the market growth that then drives cash and earnings. Tell me I'm wrong.
Right. But like the TAM, the total addressable market is really it's like you're when you're investing in Tesla, you're not just getting what you're able to buy today, which is the car business and starting like energy made a little bit of money the last quarter. So, but you're it's the optionality of what's the next thing that Tesla makes, right? They're going to go into the housing space that like there's just continuous innovation occurring, but all of that sounds dandy, but for me it's just about like how much earnings can you do, right? How much are you making any money? That's the oldest accounting way, oldest accounting method. Open up the bank account. Is there more money than there was before? And that's what Tesla's doing. It's continuing to increase its war chest.
Stock buybacks. Joking. I think the estimate is they're going to be higher than Apple's stock cash on hand within 5 years. I mean, it's just psycho that they can catch up to Apple in the first place.
Is it though? But isn't that the entire point? Is that this is like the iPhone moment for mobility across the planet? It's like that's what got me was that you saw these, these smart cars, and you went from having a dumb phone, and I had a flip phone, and I would say that I would never, buy a smartphone. I needed to have an alarm. I needed to have, a phone book in it and make phone calls. But then now I have two smartphones. So, things change, and I think that that's the important thing. Is there's a lot of bear argument, and I heard a great Twitter space today, and it's just like you if you're not evolving, if you're not realizing that something's changing right under your nose, it's foolish to not realize that what they're going after is it's massive. Just like you said, just in the cars, but then you have the energy and all the other stuff. And where are these batteries coming from? To electrify the entire planet, right? For every possible mobility form of transportation. So that has to come from somewhere, and Tesla's innovating in that space, and they're vertically integrated as they're doing.
Guys, we're sounding like acolytes. Is there nothing that is Tesla like too good of a true story? It's like, are we all like a bunch of bulls telling bullshit to each other?
Best risk-adjusted investment you could make. I come from like the Christian world of classic investing, index funds. I didn't know anything. I didn't know any companies, except when I was a kid. I'd look at Netflix. I'd look at Facebook. I'd look at these. Obviously Microsoft was the original thing that I grew up with as a kid of the '90s. Like when you see it, it's so clear. There's nothing else that you can invest in that's going to grow this quickly. So you want to buy Amazon or Google? Okay, but are they growing at this rate? No. And so I don't know. I'm not a wizard, but I could see that Tesla has an addressable market that's just huge. We just hit 5% of EVs, and the exponential growth is just beginning.
I have all my money in Tesla right now. And so the one thing that I'm afraid of is something catastrophic coming. And so the one that could, and Christian and I talked about the last space, was I called it the Tesla killer, is robotaxi. So if somebody else solves autonomy ahead of Tesla takes too long, even though potentially they've got the right strategy. Somebody else solves it sooner, it comes out sooner, then nobody will ever buy another car unless it's got robotaxi in it or autonomy in it. So what's the likelihood that anybody else, and maybe could it come like sight unseen, like we haven't even heard of this company and they just solved it and they come out of place? What's the likelihood that that's going to happen?
No, so yeah, we disagree on this, Herbert. I don't think that's the risk to Tesla. The risk to Tesla is in my opinion, two things. It's geographical. So headwinds, something goes wrong with the factory. We saw that the first time. Like right now, Shanghai is, and I said this a million times, it's the heart and lungs of the company. That's where the profit center is happening right now. That's affording the two ramps to go down. If you lose Shanghai for any reason at any lengthy time, 3 weeks, 1 month, 2 months, you are taking so much cash out of that company, and it just is not the same company. Now, over time, that will get better as Berlin ramps and as Texas ramps. Shanghai will still be super important, but it'll be, we can get away with it for a short time. But right now, we need Shanghai on all cylinders. We need everything on all cylinders. We're still in a market where the market wants to see the evidence, and we need Texas. We need 4680 to get going. We need Berlin. They're doing 1,000 cars a week reportedly, and hopefully they're going to do 3,000 by year end. You need those factories pumping out 250,000 to 300 cars next year, right? We see Shanghai at a run rate million plus. Fremont's doing what it needs to do, 600,000-700,000, maybe more. They said that would grow 50% over time as they make improvements. So to me, it's more Shanghai staying open. And luckily, I follow some accounts, and it looks like in Shanghai, knock on wood, COVID seems to be under control, and it looks like they figured out all that. So I don't think that that's a major risk now, where it's a risk that I look at, but it's not a risk that I worry about day to day. But facts may change on the ground, and if that happens, my behavior may change. But as of now, That seems like it's a go. So the main thing we're trying to do now is ramp the 4680. I think that could possibly be a bottleneck, because if you want Cybertruck at scale and you want Texas to be, rocketing at scale, you're going to need batteries. So for me, it's raw materials. They've talked about lithium. You've seen Elon talk about nickel on conference calls, saying we need nickel. Anyone make nickel? Then he did the same with lithium. If you want to make a lot of money, go in the lithium business. They got software margins. So to me, it's a materials and a geography shutdown of factory is the downside. I think as long as the factories stay open, this is a gross margin machine. It's an operating margin machine, and they'll sell every car they make.
In terms of other things that could really, so I still disagree with you, right? I will stay with that. I still think that autonomy is the number one challenge. Elon mentioned it. Another car comes out, we have to solve autonomy before somebody else does. The other thing, obviously, everybody thinks is key man risk. How important is Elon? So if something happens to him, God forbid, what's going to happen to Tesla? What's going to happen to the mission? What's going to happen to my investment? And am I right or wrong to think that today Tesla is where Apple was when Steve Jobs died? He had already built the product that is game changing. He had already been out in the market for 5 years. He'd already had factories building and selling like crazy. So when Tim Cook came on, everybody said, that's it, innovation's dead with Apple. True, but I still have my money in Apple. And guess what Tim Cook did, right? 10, 15 times the size. Like, it's now a $2 trillion company when it used to be just, hundreds of billions of dollars. So an operating person at the right time when it's already lead, I think that's where we're at. That I think the stock, my guess is 30% hit. The stock might go 30, 50% hit. It'll bounce back up to 30% high. And then it'll just keep growing based on earnings. And the earnings and cash flow should not change if Elon's no longer there. Now, all the new ideas we've been talking about, robotaxi, that could be an issue. That could be an issue. Another company could catch up. But robots and energy, those things may not happen as quickly as we think it is. His innovation's needed for that. But yeah, so I don't know. What's your thoughts on that concept of how important is Elon?
Yeah, I think there would be a market reaction as a result, but I mentioned that you're getting the option of what Tesla can do, but a lot of it's already been designed or thought about or discussed. So just speaking from, like, how many investors are looking out that far that Elon's the only reason that this company is successful? No, it's their just raw volume of cars that they're producing now and what they're going to produce. Like Cybertruck coming out, that's so weird, right? That wouldn't have happened without Elon. It's like Elon's crazy dream that he could put a moon rover on this planet that's like a Halo car, like the Warthog, not like a Halo car that for a factory, but anyway, I think that there would be a reaction, but within 6 months, I think, like Christian said, ultimately it comes down to, you show the market that you can produce earnings and you're selling these things, these widgets, then the market's going to reward you for it.
How about you, Christian? What's your thoughts on that?
Yeah, I agree with Xander. I think Elon, the business is far along now where Elon is still focused and it's still a big part of it, but he's less important, in my opinion. He's got through the Model 3 ramp. We got Model Y going. Autonomy, he works day to day in that. I think that's where his energy is. It's SpaceX on autonomy. But you just answered your own question, Herbert. You said Tim Cook got there. The innovator went away, and Tim Cook, with his buybacks and dividend and running it, making sure the trains leave on time, grew that company like crazy. He's the most boring guy in the world. So if Tesla brought in, after Elon's done all the innovation, if we bring an operator, say like a Zach Kirkhorn, I'm just making him, and he could get the trains going on time and get those margins, and the EPS is dropping, and then they do your beloved buyback, and then they do, a dividend. This could be another, turning into a $5 trillion, $6 trillion company a la Apple, because you got your boring operator like Tim Cook at the helm. So I think he's less important, but he's still important for the next, I would say, 3 to 5 years. Absolutely.
Oh, Christian, I love to pick on you, buddy, but you're like all about money. All you want is money, 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 money. You don't care about Elon. You don't care about the mission. I'm going to buy and I'm going to sell. Oh, I'm going to sell Tesla now. I don't really care. I don't need to support them, but I'm going to make money. So I'm going to sell instead of like, hey, I'm here for the mission. I'm here to support Elon. That's why we're here. We're here about sustainable energy, buddy. You don't care that the climate's going to destroy Earth? All you want is cash in your bank.
I have to comment, Herbert. That was totally uncalled for. So I love the mission. I've watched every Elon video. I love the company. But there's a difference between blind faith and, smart investing. So when a stock 20x's and it's gone from 300 before the split, and it ends up at 1.2 trillion when it started at 40 billion when I got involved or less, then you got to look and say, hey, maybe it's going to pull back. And it did. And if I'm able to, get out with a lot of capital and come back in much lower, I call that smart. I still support the mission. You can still be a great investor or smart investor and still support missions. There's people that support missions that don't invest at all in the company, and they support it and they promote it and they do everything they can. So I love what you're saying. I know you're trying to egg me on here, but I think my response was a great response, and I counted you well.
Yeah, and I'd like to bring up an old point. There's a difference between capital preservation and someone who's looking for growth, right? I'm 40, and so like if the market crashes, I don't need the money. It's my retirement account. But for someone who's worried that their nest egg can go away, or they're getting closer to retirement, they can't take that kind of a risk. They have to be in the mindset of being disciplined and not overexposing themselves to one asset class or one bad tweet or something that can cripple you because you're going to rely on this money. So I think I think that a good thing that Christian has taught me is to love the company, believe in things the way that I did, but also think about it. Don't marry the stock, right? Don't marry the company. Just I'm 100% invested in Tesla. In fact, I sold my 5 AMD shares today and put it towards Tesla. So I have to add a couple of bucks, but like being 99 point whatever percent exposed, it's dangerous. Especially my portfolio is about 50% in leaps, which I need to recover. And then, I want to reconsider this like blind bullishness that can happen to us. And so, that's that part of learning. I'm a new trader to 2019, right around where Christian said, $40 billion market cap. You really want to understand that as we saw, stock can get cut in half by 50% in the case of Tesla. Never mind all these other companies that aren't making earnings, what their valuations are. So, everyone has to analyze their own risk and what they're willing to do. With my corporate money that I'm overseeing, I have to be much more disciplined. I can't. I sold it at 800, and then I just thought we were going to come back down. Now it turned out to be a mistake, and we're keeping running. But what if tomorrow something bad comes out and the entire market sells off for something bad, right? I have to judge that. So I don't think anyone has to pick one direction for how they trade or how they view things. You could dabble in all the different disciplines, right? Understanding how the algorithms trade, understand how a retail trader analyzes things and how they act, right? Like the meme stock. stocks. And then also understand how Wall Street thinks, right? Like following Gary Black, it really gives you a nice sneak peek into seeing how Wall Street thinks and what they're worried about.
Okay, well, we're going to see who's going to make the most money, me, you, or Christian. But I'll tell you, this is what my wife says to me. Okay, she says there's 3 rules of investing that we all know, and you've broken all of them. She says, 1, never fall in love with a stock. I think you said that, Xander. 2, never, don't have just have a basket. Don't just do one thing, right? Have a basket. Diversify. And 3, make the cash register ring. Okay. So that is what you do, Christian. You are like somebody who makes the cash register ring whenever you think it needs to ring, and then you buy back. You have cash and you buy back when you can. And then you don't fall in love with a stock. Agreed with that. So my answer to that is I say, well, first of all, I don't fall in love with stock. Look what I did with Apple. I held it on for 10, 12 years, and then I stopped falling in love with the Apple, and I fell in love with my new love, Tesla. So much so that I sold all my Apple and moved it. I think Apple's going to double. It might triple, but Tesla's going to 10x or 20x. And I think that, like we talked about, the market potential for Tesla is just starting, where Apple needs to figure out what its next area is, service and all that. They'll succeed. I'm not saying they won't. And then 2, make the cash register ring. Yeah, but let's say I do what you did, Christian. Let's say I picked it at 1,200. Let's say I make the cash register ring because it's at all-time high. Oh, by the way, Tesla's been at all-time high all the time. Since every time I bought it at 600 a year ago, all-time high. 700, 800, all-time high. How dare me? How dare that? Just a few years ago, it was at 300, 200. How dare I buy it at 800? Well, it's always going to be an all-time high if you have a stock that's continuing to rise. Okay, so let's say I make the cash registering at 1,200. Well, what if it doesn't fall? Well, you got sitting with cash. You're not maximizing your potential for growth. So the next one is diversification. And you guys tell me if I'm wrong here. I think Tesla's diversified. Now, it's not quite yet because 90 whatever percentage of their revenue is still cars. But like we said, there's all these I think there's 21 businesses they're in. There's clearly going to be lots of different revenue streams. If I put my money in Tesla, is that one company? Yeah, yes, no, maybe, I don't know. Tell me, but I kind of like, that's how I excuse it. My excuse is that, well, it's a diversified company. So that's what I told my wife.
So Herbert, let me counter some of those points. So I respect you, and I think they're good points, but let me tell you how you can do it without being all in. So I was never an all investor. I know a lot of the audience is an all investor, and I respect that, and they've done very well, and I completely I'm fine with that. Now, people have to do what's comfortable for them. People have to sleep at night. Like Xander said, if you have someone who loves Tesla, but they happen to be maybe a little bit of an advanced age, no one can guarantee anything. No one knows exactly what's going to happen. So what I was saying, and we've talked about this in a lot of our Twitter spaces, if you have a sizable amount of capital, meaning you have a lot of money, you can take, 30, 40% of that capital. And if you want to dedicate it to Tesla, if we think what Tesla is going to do over the next 5 to 10 years, 5 or 10x or whatever, then you're going to do very well by allocating 30 to 40% of it. There's no reason that you have to be in 100% if that wasn't your strategy to begin with to do very well with Tesla. Because Tesla is such a great stock that we believe over the upcoming years, you could take a portion, a significant portion, 20, 30, 40%, allocate it and do very well and maybe sleep a little bit better. Again, I'm not saying everyone does it a little bit differently. So what I'm saying is, and that's the beauty of all three of us, everyone has a little bit of a strategy. I was never an all-in investor with Tesla. I did very well with Tesla with the capital I had in it originally in 2019. But what I'm saying is I did very well without being all in, is what I'm saying. So you're right. If you're young and you're just starting out, you want to catch Tesla now. You want to be buying with every dollar, every maximal dollar. You need to get into the hundreds of thousands. So if this 10x, you become, wealthy beyond your dreams. But if that's not the case, you don't have to take outsized risk, especially at an advanced stage, because then you don't have the time to recover the losses if they come. So that's just an important point.
Yeah, and I agree. For me, it was my first stock, my first individual stock that I ever purchased. So um, putting as much money towards this idea that that in 10 years that money can 10x or maybe more. That required raising a lot of cash, so much so I sold my house, two of them actually, but I sold and put it all towards Tesla. Now family and friends still think it's insane, but there's something that you said earlier, Herbert. Selling at 1,200 when you're really far away from like what it should be trading at, or right, the market's all euphoric. There's a difference between that and what Christian said about not selling it at 1,200 now, because you're on the way up. Your multiple has been compressed, so now your earnings have gone up, but your multiple that's being assigned to it is actually too low, right? Like look at it, look at Gary Black tweets. The estimates for the street's estimates for where the stock is going don't match what the stock price is, right? There's a nice chart he posted, I think yesterday or possibly today again, and you could see that there's a disconnect, right? And that's the opportunity, is when you see this, you don't need to look out 5 or 10 years down, into the future. Just look at it now. There's a disconnect in the market. He upgraded his price target from 14 to 60. Now, I don't follow everything that Gary Black. I actually like ARC's research is what hooked me, was seeing what it could become, down into the future. But for me, back to the point, 100% makes sense. There's nothing else that I can invest my money into besides my businesses, which I do as well. And then maybe I'll get back to real estate when the market kind of changes. But I think we have such different, unique journeys that you really can't. You can't say that you can't fault anyone for the strategy that they choose. It's just like Christian said, what can you sleep with at night? Or what are you comfortable with?
That's the beauty. The three of us have different philosophies. We're all successful, and each person's different. They have a different risk profile. So I'm not going to say that mine is the best, but yeah, it's the best. So here's what happened when I did Apple. I was diversified. I had a basket. I started putting in Apple. And then, you kind of mute your growth and you realize this is a strong company. Why would I try to invest in other options? Now, when I was younger, I would invest in biotech stocks because I was hoping to do a lottery and win. I lost a lot of money in lots of those things. And as I got older, for me, it was important to be more safe. So I stopped investing in these penny stocks or these biotech stocks that you never know if it's going to succeed or fail. Apple, to me, was a very safe stock. I can almost, like I've been saying recently, that I can do a straight line and watch the growth and watch the earnings and the cash flow over time. I think Tesla's a safe stock. It's very volatile because we know all the reasons. Elon is one reason why it's very volatile. There's a lot of hatred for Tesla. There's a lot of enemies that they're fighting. If you believe that none of these industries can still topple Tesla still today anymore, they could have 2 years ago. I have friends who tell me that don't be afraid, don't be surprised when the politics and the current industry decides to crush Tesla, and they've had their day. And more importantly, the government. If the government decides to turn on Tesla, could they stop its growth? And I think it's too late, personally. I think it's again, I'm very confident straight lines growth. So to me, Tesla's a safe bet. Again, everything we're saying, guys, I'm not investment advice. I'm just having fun. I like to poke holes on my friends, but they're very, very smart. And they've taught me, both Christian and Xander, to tell you the truth. That's why I kind of have to make my ego a little bit better. They both showed me that I could make money more, like exactly what Christian did in the last 6 months. And then Xander taught me, and I actually followed his advice. I didn't want to do long-term options. Sorry, Christian. See, I don't even know the right terminology. That's how a newbie I am. And they're called leaps. They're not called long-term options. They're called
that's
leaps.
what the acronym is actually, it says, I forget what it is, but it's long-dated, call option. So you have it. The idea is correct. That's what matters.
Okay. Anyway, so that's sort of my philosophy. Anyways, I like this Jeff. Jeff is on a comment. We'll invite him next time. He's an amazing, intelligent contributor to our Twitter spaces. And he puts up this comment, says, temperament is more important than intellect when it comes to investing. And he says Warren Buffett, and he believes in that too. So this is what we've been saying, right? I know, Christian, make a comment on that. Same with you, Xander. But in my case, I don't want to trust my temperament. I am a human being. I'm going to get emotional. I got scared when you guys were scaring the crap out of me that the recession, the runaway inflation, the world was going to end. When you guys were saying that 2 weeks ago, you scared the crap out of me. So basically, I don't want to make a decision. So I don't. I'm not going to buy. I'm not going to sell. Just going to close my eyes. And I'm going to imagine myself 5 years from now and what that's going to look like. That makes me feel good. I feel comfortable. So that's my. I don't want to have temperament. So sorry, Jeff. I disagree with all of you guys. So it's not temperament. It's your intellect, which is ignore temperament. Okay, Christian, what's your reply to this?
Yeah, no. So I love what Jeff said there. Temperament. For people who don't know, I love Stoicism, and the greatest investors are Stoics, I believe. So it's someone who can control their emotions, that could look at things objectively, and they don't get wrapped up in, short term, the stock's going, it's doubled, I think it's going to go 5x, and they start buying at terrible valuations, right? Because if you do get a market downturn, you can get severely dislocated, right? So if the market continues to go up and you catch it as it's already been going up for a while, maybe you'll make another 10, 15, 20, 30%. But if you don't time it right, you could be out quick down. So I think temperament does play a lot of it. I think your situation has to, play a lot of it. Like if you've already had a huge gain, there's nothing wrong. I'm not talking a double, a triple. I'm saying if you're playing with individual stocks, if you've turned, I'm just going to make up a number, 50,000 into 2 million. I mean, yeah, I understand. I'm not judging anyone, but it's okay to take some of that, put it to the side. And if the stock comes in and you still love it and you see value, buy more of it. Or if you see another opportunity. What I'm saying is, at some point, things change. Now, for Tesla, that's not the case. But if you were in another a company and you see what happened, look at Peloton. If you bought Peloton, it went up tremendously. If you held it now, you're down. So it's ridiculous. You want to sell Peloton 20x higher, not now. So you have to be realistic about the same thing with a lot of other companies, the Robinhoods of the world. There's so many companies that if you just sat there and held them, I'm not comparing them to Tesla, but investing
exactly.
Investing in general, though, you have to, especially when you're dealing with individual stock. If you're just buying the index and you plan to hold it for 20, 30 years, absolutely. Don't sell it. And you're working or you're just adding and you don't need that money. Keep dollar cost averaging 100%. But if you're playing individual stocks, you got to keep your head up and you got to be researching it daily and looking at market moves. And you also have to look at the macro, like the Fed, because the company could do really well. But if the Fed wants to come in and stop the party, they will, and your stock will go down no matter how great it is. So you need to learn about this stuff.
Yeah, and that's I want to mention something that finding Tesla and then putting all of your money. I have children. I have a 4-year-old and a 10-year-old, and amazingly, I have a wife that supports the decision of selling your house and putting it towards Tesla. But I have a responsibility. So my job is to make sure that I know every single thing that's happening with Tesla and pull that ripcord if there's an emergency, right? And so it's to think that, oh, you just set it and forget it and you don't look at it. I think that's dangerous. You have to analyze, right? That's the greatest lesson I learned from science class in 8th grade was one word from Mr. Bob. It was analyze. Just continue to do so with everything that you do, and then look for the opportunities. At some point, Tesla might stop growing, and there might be another hot thing, right? And then at that point, I will pull back some money from Tesla position and put it towards another position, right? That's it. Just it depends what's happening with those companies now. Who is that? Who's going to have this kind of TAM? I don't see that happening anytime soon. So that's why I just continue to be 100.
Okay, everybody. So thank you so much. We will do better next time with our audio. But this is the CyberBulls. We're three bulls. You have Christian, who's a fly-by-night bull who compares Tesla to Peloton. There is Xander, who is the YOLO bull. He likes to bet all of his money on risky options. And then there's me, who's the better bull, the best bull, who's optimistic about Tesla and loves the mission and loves Elon. Come back next time and we'll do better. Thank you, everybody. Appreciate this. See y'all.
Thanks, you guys.